March just had the most showings since 2019. That's great, right? Spring market, you want people to be out looking at houses. However, we just experienced the worst number of properties going under contract pretty much on record. So what's happening? That and more coming up in this month's edition of Atlanta's housing market update. Let's jump right into it. So spring market, things are supposed to be on fire. You're supposed to see a whole bunch of houses coming to the market, going under contract, closing, basically people moving. That's what you want to see in a healthy spring market. It's not that properties aren't moving right now. I'm going to show you. I've got a couple of charts that are brand new in this series where we're going to look at some of the top performing zip codes and some of the top zip codes that are just very sluggish right now, a little bit later in the video. But there's something happening out there. We basically have the most amount of showings since early 2019 and the fewest properties going under contract since I can access the data, which goes all the way back to 2012 for the month of March, that is. So let's take a look and see. So this first chart here is going to talk about consumer sentiment. It's a metric that's put together based on a survey that the University of Michigan does. And they poll a whole bunch of people and they find out how they're feeling about the economy as a whole. So this isn't necessarily just focused on housing per se, but when you factor in how people feel about, how things are going, right? So this is the lowest that it's been on record. It's at the number is 47 on the index. And the last time that it was this low was basically never. It's the lowest on record since they started tracking this. Now, we saw a little bit of an uptick earlier in the year. Things were starting off great this year. Interest rates had trended down into the high fives, which we'll see here in just a little bit. And then missiles started flying in the Middle East pretty much on the last day of February, right? February 28th is when the war started. Interest rates shot back up, whole bunch of uncertainty about what's happening. And then regardless of what's happening with the war, you also have uncertainty with what's happening with the job market, AI displacement. There's a lot of different things that people are worried about, home affordability. And it's not necessarily just because of interest rates and house prices, but you look at where insurance costs have gone, which from what I've heard, they're up 46% since 2020. It's a big, big jump in affordability when homeowners insurance just skyrockets like that, right? So in looking at consumer sentiment, the dotted line is the month over month. The blue line is a rolling 3-month average. It's a little bit low. There's a couple different charts that we're going to look at here. I'm going to show you that the market's not all bad in certain areas. There are some areas in Metro Atlanta right now where the average sale is above the asking price. It's crazy. Median days on market so low, you'd think that it's a numerical error, but it's not. We have a big enough sample size. So let's continue diving in. The next chart that I wanted to look at is builder confidence, because a lot of our market here, Atlanta is a top 5 market nationwide for new construction. And that's obviously going to play an impact based on when you see how builders feel about the market as a whole. They're either going to build more houses or they're going to pull back a little bit. And in our markets, I would say that builders are a little bit more weary of building spec homes, right? They'll build spec homes, but they're not building as many as they once were. A lot of builders have shifted to a build on demand model where they wait for somebody to walk into the neighborhood and say, I want that lot, build me this house on that lot. Then they'll build to suit. Production builders still, but they'll build that house for that specific person. So they're cutting back on the carrying costs that you have with spec homes. Spec homes are sitting on the market longer. So builder confidence as a whole across the U.S. right now, this is based on a National Association of Home Builders confidence. It's a survey of all the builders. It's at the lowest point it's been in 7 months. So they're not feeling great about what's happening either. Now, moving on, here we got to see the composite index versus the 30-year fix for mortgage applications. Now, when you take a look at this, these are in the dark blue, light blue on here. These are mortgage applications, and it's an index, right? So up, down, when it goes up, there are more people applying. There's a seasonality to it, of course. But relative to the 30-year fix, you saw here where it was trending down. This was a spot over the past year that just had a whole lot of reason to be optimistic about what was happening with rates dipping into the fives, right? And then, everything happened, as I mentioned, with the war in the Middle East. And mortgage applications basically had been trending up because rates were starting to come down. And now these past couple of months, they've been trending downwards. So why are mortgage applications interesting to the stats and what we do in this video? Well, they're kind of like the lead indicator, right? Because if you think about it, if no one's applying for a mortgage, because before you start looking at houses, your real estate agent is going to tell you to go and get a pre-approval letter. So when you get a pre-approval letter, you're applying for a mortgage. Now, when you have a contract, it's a formal application that they pull. And but nonetheless, when you see that mortgage applications are down, it's a lead indicator. If you have less people applying for mortgages, there's probably going to be less people out buying houses if there are fewer people applying for mortgages. So that's an interesting tale here. What you see here is a precursor to what could potentially happen in the market in a couple months from now, put it that way. So week over week, they were up 1%, which is good. Refinances are down. You take a look at the change year over year, though. This time last year, mortgage applications were 7%, just about higher. So that's down as well. So consumer sentiment's down about the whole market. Builder confidence is down about the new construction market. Mortgage applications are down right now. Pendings are down. But hey, showings are up. People are out looking at houses. They're just not necessarily buying them. So let's keep moving on and we'll see a little bit more about what's happening with this market. So that brings us to rates. So this is what I was talking about right here. So this is February 28th. That's when the conflict in the Middle East started. Rates, the 30-year mortgage at that point was right at 5.99, shot all the way back up to like 6.5. And then over the past couple of weeks, the straits open, the straits closed, ceasefire, this, that. You never know what's happening. It feels like the market's being gamed a little bit, but at the same time, rates have been trending down. Stock markets responded well, but right now we're at 6.3%. That's the average 30-year rate. So I've got clients that are getting rates in the high fives still. You can get rates a little bit higher than this if you don't have the best credit profile. It's a case-by-case basis. But the average in the marketplace right now is right at around 6.3. It's at 5.65 for the 15-year mortgage. Now, the 10-year treasury has been holding steady somewhat. It had dipped into the 4.2s. It was 4.29 roughly a week and a half or so ago. Now we're up to 4.32. As you see, when you take a look at these lines, you look at the black line, you look at the red line, there is a distinct correlation between the 10-year treasury and where the 30-year mortgage goes. It's very, very correlated. So right now, we would need to see the 10-year treasury come down in order for these rates to continue trending down. Stability, markets don't like uncertainty. So when there's uncertainty in the world with war, for instance, especially one that our country is involved in, it's going to add some uncertainty. So that's kind of what's happened with mortgage rates over a little bit. If things end up, I think, with a ceasefire and the war ends sooner rather than later, brings a little bit more stability back and confidence back to the markets, maybe we'll see the rate start to tick back down. But it's frustrating because when you take a look at these rates over the past couple of years, every time that they started ticking down to where we thought that rates would not just dip their toes into the fives, but stay there and get towards like the mid fives, just that jump opens up home affordability to so many more people because there's a bunch of people who are on the fence. They'd like to be able to do something, but these rates are keeping them from doing that. And when we saw rates dip into the fives, mortgage applications shot up, so there's a bunch of people who are just waiting. And now with things that are happening with the war and just the climate in general right now, a lot of people are just pumping the brakes and are waiting to see what's going to happen. So that's part of what's happening to the spring market that feels like it's a little bit more subdued than it's been in previous years. Let's keep moving through these stats and we'll take a look. So median price. I wanted to mention also in this video, in the previous ones, I did a deep dive for single family, townhomes, and condos. This video is going to focus predominantly on single family. We don't have a ton of people asking for stats for condos. What I'm going to do is I'm going to give just a quick overview of how they compare. But when we deep dive the different counties and stuff, it's going to have a single family home sort of focus. Okay. So townhouses and condos, not going to be the dominant factor in this specific video this month. If you feel differently and you would like to see a return for those, drop a comment. Let me know that that's something that you're looking for. But from what I've seen and what I've heard from the audience, most people care about the single family houses. It takes a lot of time to prepare these stats. So that's what I'm focusing on in this video. Okay. So single family, the median price has been at 445 for some time. Like that's a very, very even line. All right. So 445, the overall market for the longest time I was coming on here and I was saying that the median price for the overall market was 425. And it was for a very, very long time, but we've been trending down a little bit and we're at right a hair under 421 right now for the blended median price. Townhomes are at 385. If you go back to March of last year, they were 393.9. So that's down, not quite a full $10,000. It's down $9,000 on average at the median. But that is a drop. You take a look at condos. This time last year, condos, the median price was 300,000, and now we're at 294.9. So both of those property classes are decreasing in value across the metro. Now, moving on, we're going to break this down by county. So you see here, the red dotted line is the Georgia, or not the Georgia, but the greater Atlanta area. It's 445. And because we're focusing on SFR, I'm adding an extra year just so you can kind of see year over year trends. So gray is 2024, black is 2025, 2026. Blue on my charts is always going to designate single family. So that's where we're looking at. So there are fewer counties where we're seeing the median price go up. There is a little bit of a pullback in some areas. When you take a look, for instance, at Cherokee, it's up a little bit. Cobb, Cobb's going to be one of the standout counties as we develop this video today. So you'll see a couple of other stats there. Fulton, year over year appreciation. The median price home in Fulton now is 573. The North Atlanta market obviously has a big part to play in that, but hey, don't forget, the in-town markets, which you'll see here. A lot of the in-town zips are just flying right now. So this is Fulton as a whole is doing quite well in terms of, median price. So where we do have a pullback, there's a little bit of a pullback in Gwinnett, a little bit of a pullback in Forsyth County. Forsyth County still has the highest single family home median price across the whole metro. If you were to take North Fulton and turn that into its own county and separate it out from the in-town stuff and the south side stuff, I would bet that that number would be higher for the North Atlanta portion of Fulton. But since we're taking Fulton at face value for the entire county, it comes in second right behind Forsyth County. So in some of the other counties that are a little bit more accessible because the median price is lower, you're seeing parity, right? Like it's basically no increase at all over the last 2 years in Rockdale County. Nothing meaningful in Douglas because it went up a little bit, but it's back down. Same thing for Clayton County. So this is where you can find more affordable housing, but the markets are pretty stale there. Same thing with Paulding County, for instance. So let's take a look next. We're going to take a look at total volume. And of course, there's a seasonality to it. And because single family homes make up the dominant share of the overall market in Atlanta, it's quite a bit more volume that's being done at this level. Now, obviously black is overall, single family blue, townhouses, and condos. So see, like the condo market is not insignificant. $100 million worth of real estate is certainly a number that is still a lot. But when you compare that to the $1.8 billion that closed for single family, it's a drop in the bucket. Now, the seasonality of it, you see here, January, right, bottomed at 1177, and that's a big uptick for the season. But you take a look at where we are this year compared to last year, it's 1.8 billion. If you go to March of last year, it was 1.95. So it's down roughly $130 million year over year. That's a lot less real estate that's selling in single family across the metro. For townhomes, we're at 274. Last year it was 306. So that's down a whole 32 million, but proportionally it's a bigger number. And then when you take a look at condos, it was 115 down to 106. So smaller drop for condos year over year. But nonetheless, single family is still a big jump. And overall, 2.2 this year, 2.2 billion, and last year was 2.3. So there's big indicators. There's less properties overall selling, and it's starting to impact volume, which will be highly correlated there. So this is where we are for single family. So last year at this point, you kind of see where we were. This year we're trending under. So it's going to be like that for a lot of these different metrics. So let's break it down volume by county. Cobb County on this list is the only county in the entire metro where the volume went up year over year. So it's a big increase from 282 million to 310 million year over year. Fulton, on the other side of that, has a pretty big pullback, almost a $30 million pullback going the other way. Gwinnett, big pullback as well, 369 down to 315. That's a much bigger drop. And then pretty much everywhere else, it's a drop as well. Now, moving on, we're going to take a look here at showings. So I mentioned that overall, we've had more showings than really in recent years. You have to go back to 2019 to have more showings in the month of March. This is where we are for single family. So there's 87,500 and change, 600 and change that we'll see here in a moment for the overall market. But for single family, we're at 69,233. Last year it was 64,000. So there's over 5,000 more showings that happened in the month of March for single family homes. So a bunch of people are out looking. And then when you break this down by actives and pendings, so you got to go all the way back to 2019 to have more for the overall. Now this is overall. So it includes the townhomes and condos, but these numbers are overall as well. So when you look at actives, right? So a lot more actives, a lot more showings, but here's where things are kind of diverging. So if you go back to 2021, there were more pendings than there were actives in those months of March. Showings were quite high as well. But now that we're looking, if you go all the way back to 2019, you had 7,388 properties in the month of March. This is the pre-COVID, the pre-pandemic boom that we had in the market, right? When you had, or not pre, but post. So after 2020, 2021, market just kind of took off. This is before that happened. This is 2019. And in 2019, there was almost 7,400 properties that went under contract in the month of March, and now we're looking at 4,500 for the overall market. That's almost it's like 2,800. It's almost 3,000 less properties going under contract, but you have almost as many properties being viewed, the showings, right? So people are out looking. They're just pickier than ever right now. And that's important because there's a lot of strategy that comes into play, which we'll talk about as we go through. But if you know as a home seller that buyers are going to be pickier, you've got to make sure that you're more buttoned up with your property, making sure that it's show ready, that you can fix the things that you can ahead of time, that you're priced well, because otherwise, in very few zips, which we'll see here in a little bit, I'm actually quite excited to go over the top 10 list that I put together because there's some interesting surprises there. But nonetheless, buyers have a lot of choices right now. There's 18,203 active properties on the market. Very few of them are going under contract. So you have to find ways to differentiate yourself from the pack to be the next property that sells. So we're going to talk about that in just a little bit as we get into some actual usable tactical advice that you can use, whether you're buying or selling. We'll cover that as we get into some more, specific metrics. So stay with me. So this is where the showings are by county. Look at Gwinnett. That's a huge number of additional showings year over year. You're almost at 2,500 extra showings in the month of March in a 31-day period, year over year. So a big jump. And you look at what that jump was year over year, the previous cycle from 24 to 25, it was a jump, but not like what we just had this year. So there's a bunch of people looking in Gwinnett County. Cobb County is up marginally. Cherokee's up significantly as well. Look at that jump from nearly 4,000 up to 5,500 proportionally. That's a huge jump. And there's really you've got to look at 2 counties on this, maybe 3 counties that had a pullback and there are less people looking. And DeKalb's one, and that's 1,200 fewer showings in DeKalb. Rockdale's down, marginally, like 250 or so. And over here in Clayton County, so they're fewer, which is interesting because, again, like you look at Clayton, Douglas, Fayette to an extent, Paulding, and Rockdale. Those are the counties that have some of the more affordable homes, right? But that's not where people are looking right now. And it's a sign that it doesn't matter. Like the price of the home is important, for affordability, but it's just these counties are a little bit further out. When you look at the jobs that are in those areas, they don't pay as well as the jobs that are in the higher priced areas that probably pay more. So it's interesting to see when you look at it because Gwinnett, Fulton, Cobb, and DeKalb are the big 4 counties with the most expensive real estate, right? Cherokee and Forsyth, they're up there as well. We saw what the median price is out in Forsyth. But all of these counties, with the exception of DeKalb, are seeing positive growth with showings this past year. And where the more affordable homes are, it's negligible, if anything. So let's take a look at showings per listing. So again, we're focusing on single family. The average across the metro is 4.8 showings per listing in a 30-day window. So that's not a lot of showings. The showings are through the roof right now, but there are so many properties that are on the market that if you get 5 showings in a given month, you're doing better than what the average is for the entire metro right now. So these are big pullbacks in some of these counties. Look at Gwinnett, look at Forsyth, Cobb to an extent, DeKalb. But specifically Forsyth and Gwinnett, you go back 2 years ago in the month of March, and I mean, Cobb as well, over 8 showings per listing on average, and almost 10 showings per listing in Gwinnett. And today it's down to 6.4. So year over year, it's still 6.4. That didn't change, but over the past 2 years, that's a big, big drop, right? So when you factor in Forsyth County, 8.5 to 4.7, it's almost a 50% drop in the showings per listing. So it's either a bunch more properties that are on the market for roughly the same pool of buyers that are out there, or there are just fewer people looking. But that's not necessarily the case. You go back and you take a look at the showings here, and showings are up in Forsyth. So it's a lot of more active properties coming to market. That's what that means. So if you're on the market as a home seller in one of these counties, let's say Cobb, for instance, and you have less than 6.6 showings at the end of the month in your first month on the market, probably overpriced. There's something preventing people from coming to see your house. The first thing that will prevent people from looking at your house is terrible marketing. No question. You take a look on whichever website that you use, whether it's one of the big portals or a brokerage website, whatever portal that might be. And if the photos are terrible, there's a good chance that you're going to skip over those listings. Typically get fewer showings. So that's important, how the property presents both in media and also the condition of the property, the perceived perception when you're looking at those pictures, right? But price is the most important overall, because you can have the worst house, and if it's priced well and it's priced at a value, people are going to go and take a look at it. So 6.6 in Cobb. If you're less than that, it's probably condition or price or marketing. Price, condition, and marketing are the 3 drivers that determine whether or not you're going to get activity. So that's it right now. It's probably price though. A lot of properties are priced higher. Again, we've got those zip codes that we're going to jump into, but a lot of these properties are still trying and testing the market, and that's a dangerous strategy to do, because a lot of people don't know this, but when you first go to market, the reason the first 2 to 3 weeks are so crucial to the marketability of your house, it's because, think of it this way. You, let's say, hypothetically hit the market at 800,000, okay? Between 800 and 900,000, you have a certain amount of people that are searching for those homes. That's what they're searching for on whichever website, right? From 8 to 900, they're looking in that bracket. And after 2 or 3 weeks, the existing pool of buyers in that segment of the market have decided, do they want to come and see your house, or do they not want to because of some factor, price, condition, marketing, right? So After that initial rush, because when you're new to the market, you're hot, you're fresh, people are coming to see your house. After that, that pool's exhausted and you're waiting for new people to come onto the market. That's why it goes from a flurry of showings down to a trickle. And the only way that you can change that to get back to a flurry of showings is to have a price adjustment where you move into a new segment of the market, therefore opening up a new pool. So for instance, if you priced your property at like, call it 825, then if you reduce your property from 825 to 815, it's the same pool of buyers that are going to see your house. And maybe there are some people that notice they like the house, not at 825, they see the $10,000 price drop, maybe they come back for a second look. But 10,000 might not be enough to move the needle in this market. You price that 825 house at 800. Now how do people search, right? They search from, you go to a portal, whatever, 800 to 900 and 700 to 800. So when you price it right at 800, you get double the exposure. So when you price reduce from 825 to 800, you're opening up a whole new bucket of buyers that had no idea that your property existed at 825 because they were searching up to 800. So that's what you have to do when you go to reposition the property. Now we're going to get into price cuts and what the different counties are averaging across all of the different statuses as we move much further into the video. Got some good data there. But when you're looking at these showings per listing and you're getting less than what these averages are, it's time to price cut. But if you don't price cut enough, you're not going to move that needle enough. So just food for thought conversation to have with your favorite realtor that is representing you. So moving on, let's look at median days on market. So median days, I like median for everything. Averages, the numbers look more impressive when you're looking at averages, but they're skewed, right? With average days on market, you'll have builders when they, whether it's a big national builder or a local, one-off, an infill new construction where an investor, small investor group and a developer or a builder work together to build a house. They'll buy the piece of land and start marketing that property. And if they leave the listing in, some of these properties have 300, 400, 500 days on market, and that grossly skews the data. So median, we'll look at at the middle of the market. So half of the market is faster, half of the market is slower, and condos right now are at the half of the market are taking 55 days in order to attract a buyer and go under contract. That's a lot. That's a lot higher than townhomes, which are at 46. The overall market, when you factor in all of these, is at 33. And single family, it was under 30, but we're now at about a month to attract somebody at the middle of the market. So 30 days, it's trended up. So we'll see what happens. Usually when you get to this time of the year, there is a certain seasonality and cyclical nature of it, and it goes back down a little bit. But remember that 30 number, because I'm going to show you a couple zips where you are under 10 and a couple that are under 5 days, and that's the whole zip code in some of these areas. That's coming up. So let's take a look. Median days on market by county for single family. So I mentioned that Cobb was one of the counties that had more volume increase than anywhere else, right? We saw a pullback on volume for most of the counties in the metro. Cobb was up. Well, look at that. It's only taking 22 days at the middle of the market to find a buyer for a property that is a single family home in Cobb County. Now, of course, this is going to be very specific. Cobb is, that's why real estate is very hyper local. You look at areas of Cobb like Walton High School in East Cobb right now, and homes are selling literally. Take Pennhurst, for example, great neighborhood right across from Walton High School, beautiful neighborhood. Had a client buy in that neighborhood not too long ago, looked at a couple of other houses for other clients. These houses are selling for 85 to 100,000 over the ask in just a couple days. Everyone wants to be in that neighborhood right now. That's a small pocket. You look at South Cobb or Southwest Cobb, for instance, or parts of Northwest Cobb, and it's a much, much different story, So even in good areas like West Cobb, where you've got very good schools like Harrison High School and Hillgrove High School, for instance, things aren't moving that fast. But because you've got Pope and Walton, and to a certain extent Lassiter, parts of Wheeler in Cobb County, 22 days is what that median days on market is. So the Metro's 30. It's up pretty much everywhere, Cobb County included. This time last year it was 16. But take a look at some of these other areas. Douglas, 44, Fayette County, 41. In Fulton, you're at that average of 30, or that median of 30, 33 in Forsyth. Everywhere it's up. Gwinnett, look at that big jump. 19 last year, up to 31. That's over a 50% increase in the days to find a buyer now. So big increases there. Now that brings us to the hottest zips, and then we're going to look at other stats. But here are some of the hottest and slowest zips for median days on market. So we just got done talking about the greater Atlanta median being 30 days. Take a look at 30307 in-town zip, 3 days. That is 3 days. There were 17 closings in the month of March in that zip for single family homes, and the median was 3 days. Something hit the market. It was as good as gone. I can't snap my fingers very well, but gone, right? Decatur, 26 closings, 3.5 days. 30342, Sandy Springs, Buckhead, 16 closing, 4 days. 30306, you're back into the in-town neighborhoods, 15 closings, 4 days. East Cobb, this is Pope, 30062, 68 closings, 5 days, median. Crazy, right? 5 median days on market. 30319, you're taking a look at Brookhaven, 26 closings, 5 median days on market. 30338, 5.5. 05, that's up in Alpharetta, 21, 6 days. 92, Peachtree Corners, that's 17 transactions, 6 days. And then you go to 30345, 11 closings, and you're at 6 days. Conversely, take a look at 30067, which is East Cobb. It's 138 days, not average, median, 14 closings. So there are a lot of houses in that specific. That's Wheeler High School, by the way. So when you take a look at that, there are some new construction houses that are sitting on the market that have finally closed, but they had such high days on market that it kind of skewed the data a little bit. 138 days. Take a look at 30214. It's Fayetteville. I think the next couple are Fayetteville, actually. 5, Fayetteville doesn't have a ton of transactions, so 5 is a little bit on the short end, but 107 days. You've got 9 transactions in 30215, 100 days. These properties are sitting on the market for 3.5 months before they find somebody at the middle of the market. Slower markets. Houston, 8 closings, good for 100 days, 99. Winston, 14 closings, 96.5. You've got 30331 in Atlanta, 91 days. White, Georgia, 90.5. Decatur, different zip. I mean, we saw 30030 move extremely quickly. And then this part of Decatur, not quite as popular with the buyers. You're at 89 days. So it's interesting how in the same city, take a look at, Marietta East Cobb, 30062 market is literally on fire. 5 days is the median. And then you look at one zip over, 30067, and it's the complete opposite. Same thing for Decatur. 3.5 days on market for 30030, hot zip. And then 30035, 89 days. It couldn't be more different. And then 30183, that's up in Waleska. Probably a lot of that is Lake Arrowhead, 85 days. And then Grayson out in Gwinnett is 81.5 days. So any surprises? Let me know in the comments what your thoughts are. These are kind of like the movers and shakers and laggards. I was surprised by the difference in some of these zips in the same cities, right? It's fascinating. So real estate, hyperlocal thing. Let's take a look at what kind of a market we're in. So the next 2 sets of charts, we're going to take a look, obviously broken down by county, but we're going to look at months of supply, months of inventory. It's going to tell us, are we in a buyer's market? Are we in a seller's market, balanced market? And then we're going to look at pending ratio. It's going to give us very similar data, but from a slightly different perspective. It's going to be the absorption rate. So, okay, condos, 7.3, clearly in a buyer's market territory. When you're above 6 months of inventory, that 5 to 6 months range is really where balance is here in Atlanta. The definition of balance is right at 6 months. That's that threshold. But really, Based on what I've seen and the numbers that I've computed, 5 to 6 months is that balance zone. Under 5 months of inventory is a seller's market. Now, townhomes are at 4.5. They are consistently trending up towards balance. And overall, you're at 4.2, and single family is at 3.9. So single family continues to be still technically on paper in most of the metro a seller's market. So where specifically? So, Cobb, for instance, 3, you're not even halfway. You're a little bit over halfway to balance, but 3 this time last year was 2.5. It's an incremental uptick in the days or the months of supply. You have bigger increases in places like Fayette, where now that's trended into a balanced market. And then also Rockdale, balanced market. Fulton trending up a little bit. Forsyth, that's a big jump from 3 last year up to 4.2 year over year. It's a big, big jump. There are a lot of houses for sale in Forsyth County. It's taking longer to sell them. And when you look at months of supply, this is how long, if no new homes were to hit the market, how long it would take to liquidate everything that's currently on the market. That's why it gives us an idea. And obviously, if it's a buyer's market, what that means is the advantage tips to the buyer in negotiations. In a balanced market, I would argue right now that a balanced market feels like a buyer's market to most sellers, especially if you bought a house over the past couple of years and you were in competition to buy that house. And if you were a seller and you were fortunate enough to sell in hours, or you happen to be in some of the zip codes that we just saw, you're feeling that right now. But nonetheless, I think that a lot of sellers got kind of spoiled by how fast the market was moving, that it shifts your reality. When a property sits in the market for more than 30 days, for a lot of people, they think, what's wrong? What's happening? Is the sky falling? And that's not necessarily true. We're just kind of trending back towards a more balanced market. Over the past couple of years, it was a very fast moving, very seller, a seller focused market where the advantage was clearly in the seller's court. And you're starting to see it shift back towards a more equitable market. Now, if we could have prices to a certain extent come down a little bit with interest rates, it'll open up the market from an affordability standpoint. You'll have more people who've been sitting on the fence able to come back into the marketplace. Now, that could also happen if wages shoot up, which will never. The next thing, the property insurance, I was going to say if that comes down, but that's not going to happen. Property insurance and insurance rates have shot up. I mentioned at the beginning of the video, 46% since 2020, I think is a stat. And a part of that is when you look at these insurance companies, they're more profitable than ever. They claim that they don't have the money to insure in certain places. They're pulling out of states in like Florida, California for the fires, Florida for the hurricanes and the flooding in Louisiana. Like they're pulling out of a lot of places, citing that I have a whole video on this, by the way, that they don't have the means to provide coverage there. But to play devil's advocate, everything's become more expensive. The tariffs, for example, have added the stat that I saw between $10,000 and $17,500 to the cost of new construction, depending on the materials that are being imported, mostly lumber, for example. So, could they source lumber here and not have to go elsewhere? If you walk into Home Depot or Lowe's and you look at what a 2x4 costs, it's down significantly from where it was just a couple of years ago, but it takes a little bit of time for those prices to cascade throughout the market. And a lot of builders, when they're sourcing materials, they're buying stuff ahead of time. And so they're locking in pricing. Now let's take a look at it from a different perspective. We're going to look at the pending ratio. Now the pending ratio looks at actives versus properties going under contract. And if you have 10 houses on the market, how many of those homes are going to go under contract in a 30-day window? That's what we're looking at. So you can see, you go back a couple of years and anything that's above, like the balance mark for the pending ratio is really considered to be somewhere between 18 to 25%. So when you're above 25%, it's a seller's market. When you're under 18%, it's a buyer's market. So what that means, like if you look at condos right now, there's 11.2% is the number for the pending ratio. Well, there's one property out of 9 or 10 that will go under contract in a given month. So if you have 10 condos in the market and only one's going under contract, then the 9 others are sitting there going, well, what are we going to do? Well, you've got to be perceived to be priced more attractively than your neighbor if you're going to sell. It comes back to that you're either helping your neighbor sell or they're helping you based on how you're priced, and also based on the perception of that property's condition, the overall value, right, that a buyer is going to see in that specific property. So 17.2 for townhouses. The overall market's at 20%. Single family is in a balanced market at 21.9. Now you can see here that single family was to end the year in a little bit of a buyer's market territory there. It's 17.6%, but that's also at the end of the year, right? The market's very cyclical. It tends to follow the school year here, especially in Metro Atlanta, and especially in counties with really good schools. At the end of the year, between November and the end of December, people are thinking holidays. So that's not surprising, but it trends back up as you head into spring market. And right now we're back into a balanced market from a pending ratio standpoint. We saw with the other slides looking at multi or months of supply that single family is generally in a seller's market position, but it's case by case. And if you use this metric and you see in a specific neighborhood that you have, 12 houses for sale, well, 22% of those should theoretically go under contract in that next 30 days. Easy way of looking at it, a little bit more than 1 out of 5, right? So out of that 12, you'll have 2, maybe 3 going under contract, leaving a whole bunch of others to sit there for another month. So it's a good stat to look at because if you see a huge cluster of homes and you find the one that you really like, you could potentially afford to be a little bit more aggressive with negotiating. If that's not the one that is priced the best, that looks the best, it's getting, a bunch of activity, of course. But nonetheless, let's take a look at pending ratio by county. So we've got our buffer zone here. Anything above is seller, anything below is buyer's market, and balance in the middle. And you see over the past couple of years that we were firmly, for most counties, actually I think every single county, in a seller's market position for single family. And then last year, still seller's market, and in a couple like Clayton, Douglas, Fulton, and Rockdale, it turned into balance. And now this year, it's favoring buyers. So buyers, if you want to get a property in Rockdale County, not only is real estate priced more attractively there, but they're taking longer to sell. 1 out of 6 right now is what's going to go under contract in a given month. You have an opportunity to make more aggressive offers. Now we're going to look at price reductions and sales price over original lists and some of the top zips and stuff coming up here in just a couple moments. But that's how you use this data to your advantage. If you want to live in those areas, that when a seller's like, no, you have to pay my price. It's like, well, okay, if I don't want to pay your price, somebody else is going to take what I'm offering because otherwise nobody else is offering. And that's part of why you're seeing these pendings go down year over year. As a buyer, it's a great time to take advantage of that. Not everyone's going to buy right now, but if you're in the market to buying, I always say, like, you don't necessarily with real estate want to try and time the market. If you need a place to live, everyone's different. Everyone has a different set of circumstances. Sometimes it makes sense to rent and wait for the right opportunity to come along. But if you want a house, you want to set down roots, time in the market is going to outweigh to trying to time the market. So right now, you have some great opportunities to get some better deals on these houses in some of these counties for sure. Fade's one, Douglas is one. Not only are those counties showing better pricing on housing, but there's a lot of competition, meaning that sellers are going to be more negotiable if they want to sell. If they're not negotiable, those homes are going to contribute to what we'll see here in a little bit, the failed listings. So places like Cobb are more competitive. But look at Fulton. Fulton's now in balance. Forsyth is now in balance. It's trending towards a buyer's market. So you have opportunities in some very desirable areas to be more aggressive with your offers as a buyer. Again, hyperlocal zips matter and local areas specifically matter as well. Now, list to sales ratio. Condos are at 94.3. Single family is right around 95.9, so like 96%. That hasn't changed. It's kind of been that for the last couple months here to start the year. Townhomes are down. They were up, so they're down to 96.1. Okay, so that's based on, this is always, the way that I do the stat is based on the original list price, not the last list price. We look at what price did they go to market in this cycle, and then if they had reductions, that's fine, but it's the sales price over the original list price that I use. Now, if they were previously listed and they started at a much higher price in a different listing cycle, that's a different metric. We don't look at that specifically on this. So let's look at it this way. So by county, I mentioned that Cobb is doing strong compared to some of these other counties. Well, it is. 96.6 is the highest that you'll see on this list for an overall county. So you're still able to get 3.4% off a house in Cobb on average. It depends where, right? Where you get some much better deals, Clayton is at 94.9, so about over 5% off of the price of a house. Fayette 5%, Fulton almost 5%, 4.7, 5.1 in Rockdale. So again, the outlier counties, with the exception of Fulton here, offer better pricing, better deals, more negotiable sellers, and they're a better entry point because they're lower priced properties to begin with. Cherokee, 96.5, that's pretty strong. It's right there with Cobb, basically. So let's take a look at some of the best and worst performing zips for this list to sales ratio. Well, the top ones you're going to see are really, really strong for property selling near or above asking price. And the top three that we have here, you're looking at 30306, which is in town, 30307, also an in town neighborhood, and Brookhaven. They're literally selling on average for more than the asking price. So that's quite impressive. Buyers are paying a premium to be in some of these areas. Now, you also have areas that are almost at full ask because we just saw for the overall single family homes across Metro Atlanta, it's like 95.9%, call it 96%. So anything that's selling for almost 99 to 99.3, home sellers are basically in a stronger negotiating position. They're getting closer to their asking price. So Decatur, we saw that Decatur had a median days of market. It was like 3 or 3.5. So properties are flying off the shelf there. 30317, it's 99.3, 30338, this is Walton High School. Mentioned Pennhurst with properties selling for $100,000 above asking right now. So 99.2% is what homes are selling for in that district. Roswell 76, 99.1, 30345, you're at 99%. That was another fast moving zip. And then out in Conyers, 98.9. So even that's a little bit more surprising on the southeast side of town. Conyers, east side of town, basically, homes are selling in that zip at a nice premium. So 98.9 compared to the average. Now where they're not performing, so we talked about Decatur, 30030 selling in 3 days for like 99.3. Go south a little bit, 30035, and some of the worst performing houses are also attached to a Decatur address, but different zip. So you're getting almost 9% off of the price. This is where the days on market were well above 100, and they're struggling here. So 91.9. Ellenwood, 91.5. 30331, 92.4. Winston, which was also on our other list, and Jonesboro, parts of Stone Mountain. This is parts of Marietta that are south of the square, 30060, 94.3. Jonesboro again, so a lot of south side of Atlanta is struggling here. Atlanta 30327. Now that's a big zip. It's Buckhead, parts of Sandy Spring, and you're at 95.1. It's under the average. So not everywhere is selling on fire in some of these hot areas. You can see here that you can get some deals in 30327. So any surprises? Let me know what your thoughts are in the comments. Moving on, let's take a look at trends. So active properties, they're up at this time of the year. That's not surprising, but there's 18,203. I was wondering if we were continuing the pace that the trajectory that we were on, if by June or July, we would see 24,000 properties on the market. This remains to be seen. I'm not sure. We're going to have to see in a couple days when I pull the stats for April and I see what happened in April. I'll be able to give an updated projection when I do this video next month. But look at the new listings. They kind of die off during the holidays and spring market, so they're up quite a bit. Pendings are up, even though we have the fewer number of pendings in the month of March on record, basically. Well, our MLS goes back with the stats sets that we're able to pull. It's 12 years. So and I have 13 years worth of data. This is the lowest it's been in the month of March, but it's still an uptick. Closings are up slightly and failed. This is for all property types combined, right? So taking a look for single family new listings, we're trending under a little bit. It's negligible, but it's still 200 less listings coming to market for spring market in March this year compared to last year. We're up against 2024. You break that down by county, and there's only a couple counties where listings are up. So listings are up in Cherokee, Fayette, Forsyth, and Gwinnett, Rockdale as well. Talked about Cobb doing well, but there's slightly fewer listings coming to market. That's a big pullback in DeKalb. So that might contribute. Like DeKalb, if you're in 30030, you have less competition as a seller, but high buyer demand. That's part of what could potentially be contributing to things just being completely on fire there right now. Fulton, 1459 down to 1301. So interesting. And then we look at active listings. We're trending above for single family where we were last year. Last year we were at 12,088. Now we're at, roughly 740 more, somewhere around there, 730, 740. So we're above last year's pace. Take a look at the active listings by county. More homes are for sale in Cobb this year. More homes are for sale in Cherokee, less in DeKalb. We just talked about this in the last slide. And then Fulton's down. Look at Gwinnett. Big jump up in the number of active inventory in Gwinnett and Forsyth County. So I mentioned earlier in the video, when you took a look at the showings per listing and you looked at the active properties, that there was something happening there, right? Well, it's more active inventory in Forsyth County, resulting in more of the showings being spread out over more houses. So your showing per listing stat is going to change there a little bit. So pending listings. So properties that went under contract. Single family is no different than the other property types. We're not doing as well as we were last year. So that's a big drop down. It's 500, 600 less properties going under contract in the month of March year over year for single family. And where that's concentrated is, you can see it. There's not a single county on here that saw an increase in properties going under contract year over year. It's a pullback across the board. Closed listings. It's not that much below where we were last year. It's roughly 260, 270 less closings, but that's still a significant number. And with the way the line's breaking here, it'll be interesting to see this next month in April. Did it catch up because of spring market, or is it trending down? Because that's not good at all if that's where that's going. So I'll be very curious to see once those numbers are available. And then closed listings broken down. So Cobb is really the only one on this list that saw an increase in the number of closings in the month of March. Everything else had a pullback. So that helps to correlate with the other stat that we saw at the beginning of the video with total volume being up in Cobb. So there were more closings. So Cobb remains highly desirable. Now, failed listings are up as well. It's a marginal increase, but still it's almost 200 more properties that have failed in the month of March, and those are expireds and withdrawns. A lot of those will come back to the market. We'll see here where they're happening, but they're going to come back to the market as actives. It's agents pulling them, doing a price drop, but putting it back in as a new listing to try and play games with days on market and that sort of thing, trying to reset it. So here we are. Really, there's not a single county on here that has less failed listings with the exception of Douglas, surprisingly. But there are fewer listings, and that's almost the same as it was. It was 85 down to 81. But some of these are seeing a lot more failures. Look at Gwinnett, for instance, 311 up to almost 400. That's a big jump up for a single given month. And then obviously Cherokee 107 to 165 proportionally is a big jump up as well. Okay, let's take a look at some of these other charts. We're going to look at actives versus closings. And in last month's video, there was a statistical error for some of these. So if you look at these ratios and wonder, well, what happened? I corrected the data. So this is accurate as of this month. So here we have 5 active listings for every closing. If you go back a couple years, there was a time in 2021 where there were more closings in a given month than there were properties on the market. Do you think that might have had an impact on prices shooting up, right? Same thing the year after. And what happened after that? Well, interest rates shot up. So less people bought these properties, more active inventory stayed on the market, less closings happened, and this ratio started to open up. But this was a negative ratio in a good way. And now it's a positive ratio trending in the wrong way. So these are a lot fewer closings in the month of March than in the previous couple of years, as you can see. Meanwhile, inventory continues to trend up. This is for the overall market. Taking a look now at single family, 4-to-1 ratio. So 12,821 into 3213 is a 4-to-1 ratio. We had that same phenomenon between 2021 and 2022. And then it started to diverge, right? Broke out. But it kind of looks to me like it's stabilizing a little bit. I think it's just a return to a little bit of market balance. I think that the market was exuberant for a couple of years, and that's kind of what we're seeing now. Because over the past 2 years, yes, I can't draw with this, but like that's pretty much a straight line going down, but it's not the biggest slope down, right? So it's not like it's breaking down like this by any means. And now here we're seeing this start to kind of taper off as well. I tell you, it's a lot harder to draw with this trackpad, but that's kind of tapering off there, as you can see. Okay, so forget my awful drawing. It's not breaking like it was here. Look at this big jump up here, and some of these decreases here. So we'll see where that goes over the next couple of months. It's going to be interesting to see, but single family is holding up quite well. Now, the same can't necessarily be said about townhomes and condos. So townhomes next. Townhomes were now at a 5.2 to 1 ratio. So that is still a big break up. And I think that you're going to continue to see townhome inventory come to market. They're still building a ton of townhomes. And then you have people who want to sell the townhomes to move into like single family, for instance, or to relocate somewhere else. But meanwhile, closings have steadily trended downwards as well. Last year was almost the same, but now we have almost 100 less closings in the month of March year over year for townhomes. So that ratio is opening up. Now, condos, worse. So there were only 294 closings for condos in the month of March, and active inventory is there. So we're at a 7.3 to 1 ratio. And in 2020, this is one of the only property classes that didn't have that inversion, but in 2022 we had it. So it's kind of been going the other way, but it seems like it's leveling out as well. So this might not be as scary as people think. I think it could be just the market getting back to a little bit of normalization. So let's take a look at price cut, shall we? So this is a different way of showing the data than what I've showed in previous episodes. So here, green are active properties, pendings are orange, blue are closed properties, and red are the failed properties. So when you take a look, these are by county of the active homes that are on the market currently. For example, in Cobb, 42.7% of those properties have had one or more price cut. That's the way to look at this. So the ones that are pending, 1 out of 3 have had a price cut. The ones that close, this is based on original sales price over original ask price. It's a list to sales ratio, 63.8. And the ones that failed, over half of them had a price cut and still failed to sell. So when you take a look at this, in Fayette County, this is a very telling tale. So most of the properties that closed in Fayette needed a price reduction, or they at least sold for under the asking price, right? 91.3%. Meanwhile, in Rockdale, it's only half of the market. So that's interesting. And you take a look at places like Cobb, it's 2/3. And there's a lot of other places that are 2/3. Forsyth, it's 3/4. So we're going to take a look and break this down by percentage. So, for instance, we were talking about Cobb. Well, of the properties that cut their price in Cobb that are active on the market right now, they've reduced by an average of 4.4%. That's the way to look at this. The ones that went under contract, you'll see across the board, they reduced at a higher click. Found a buyer, went under contract, so they needed 5%. In Fulton, for example, the average for sale house right now active is 6%, but the market needed 7.1% to attract a buyer and go under contract. That's the way to look at this. And then the ones that closed, this is what the list to sales ratio looks like for these properties. So in Cobb, it's 5.5, in Fulton, 6.6 off of the price. So you're kind of seeing in these different counties where you're getting a better deal on the original versus the ended up sales price. But at the same time, I say a better deal, but it's also potentially sellers who just, way overshot the market and needed to come down on price in order to eventually attract a buyer and go under contract. But they did. These are properties that successfully closed. And then the failures, this is interesting too, because a place like Douglas, for example, you have almost 8% off of the price of homes that have failed, and yet they still failed to sell. So how high did those people start if they failed off the market with an average of 7.8% off of their original price there? So that's fascinating. Now, if you look at it from a dollar perspective, in Cobb, the active properties that have had price cuts, one or more price cuts, have averaged at least $25,000 on average off of the price of the house. It's almost $40,000 in Fulton, and the ones that went under contract needed 38 on average to go under contract. The ones that have closed at 45. That's how I want you looking at this. So you see what is currently available, what it needed to have in order to go under contract, which you can use for negotiating purposes, and then you see what the end outcome was with what's actually successfully closed. So a different way of looking at the data. Let me know if you like the way that this looks, if it's helpful. I think it's nice to see broken down by county what it is by the different statuses. So this is the percentage of sellers for single family sales that paid closing costs, and this number keeps ticking up. So it's at least 2/3 of all listings are paying some form of seller concession, and it's as high as 81, almost 82% in Rockdale County. So again, I go back to the affordability thing. You're looking for a easier entry point into the market. A place like Rockdale County, for example, has lower priced homes, and sellers who have consistently demonstrated over the past couple of months that they're willing to give incentives in order to make these deals happen. So 82% of them, and what have they offered? Well, let's take a look at that. We've got the dollar amount right here. So $10,500 in closing cost assistance is the average number of closing costs that's being paid in Rockdale for the sellers who did pay closing costs. So if they didn't pay closing costs, it doesn't factor into this number. Only the houses, the sellers who actually paid closing costs, we're looking at how much closing costs on average did those sellers pay. That's what this whole chart is. So Fate has some of the highest numbers at almost 12,000. Cobb just a hair over 10,000, where you're not getting quite as much. Clayton, for example, there's less to give because the home prices are so low, proportionally speaking. Fulton County, 9,300. There's a lot of Fulton where homes are just flying off the shelf and buyers are paying their own closing costs. As a whole, it's 9,300. Now, if you want access to this data, it's completely free. You don't even have to sign up for it. I've got a link to all of these slides in the description and in that first comment. If you want help understanding this market specifically, feel free to reach out. You're going to watch more videos today. Definitely want to watch this video next. Thanks so much for watching, and I hope to see you on the next one.